Hey, this is your boy Eric McKinley, and I'm coming to you live from my office right here in Columbia, South Carolina. I'm in my conference room right now, and what I want to do is I want to talk to you about some things that people are having problems with, and it's their credit, man. Credit is a huge topic, and it's a hot issue, okay? So what I want you guys to do is give Facebook a little bit to do its thing. But I want you to do is I want you to drop your city and your state to let me know where you're viewing from, okay? And if you got any questions, feel free to pop the questions on. I'll be more than happy to answer them after the live broadcast. And if you want to know more, or if you want to get started today, just simply drop your email in the comments, and I'll be glad to give you the information so you can get started, okay? Check this out. With this information that I'm going to share with you, right? You don't have to ever worry about getting denied again. As long as you do what I tell you to do, if you follow these steps, you're gonna be successful, all right? So, I'm gonna ask you a question. Have you ever been denied for a credit card? Okay? Is your credit so bad that you wanna buy a home, but your credit is so bad that you're afraid to even apply or to take the proper steps to go about getting a home? What about a car? Do you need a car, or is your car so bad off that you need another car, but you're getting denied for loans? Well, here's the deal. Anytime somebody denies you for a personal loan, right? Anytime somebody denies you for a personal loan, they're supposed to send you a letter in the mail. Anytime you apply for something, they're gonna send you a letter in the mail within 30 days, and they're gonna tell you that you were denied. And most likely they're gonna basically say, hey, you were denied because your credit score was whatever it was, okay? They may say something like, hey, here's your credit score, you were denied, whatever, okay? But they're not gonna really explain to you why you were denied that loan. They're not gonna even tell you what you need to do to get on track. It's not their responsibility, okay? So, now, not to step on anybody's toes, guys, and I'm all about people making money. I'm all about somebody's hustle, right? But they got a lot of third-party credit repair agencies out there, or people who call themselves credit repair specialists out there that are not actually in it for your best interest as well. So what I want to do is I want to show you how to be more independent. I want to show you how you can actually learn how you can stop getting denied, and how you can also repair your credit, okay? And not have to worry about that again. But the first thing I want to talk about is the 5 C's of credit, okay? The 5 C's of credit. And this is what lenders look at when they actually thinking about either granting your loan or denying your loan, okay? So they look at the credit reports, they look at the credit score, they look at income statements and other documents that is relevant to your financial situation. They also going to consider information about the loan itself, okay? So those are the things that the lender looks at. So when you're going out there getting a loan, you don't know what's going on. You're sitting across the desk from somebody, you're nervous, you know your credit may be suspect, but you're just hoping for the best, okay? We want you to get in a situation, me and my business partners, we want you to get in a situation to where you're no longer hoping for the best. Not, you can just go in there and expect it because you already know what your situation is, okay? So the 5 C's of credit. The first one is character. Character. Like the little characters that's running around in Sesame Street. Well, they're looking at your character, right? They're looking at your character. That's the credit history, all right? They're looking at your credit history. That's the first C that determines your reputation. Now, they don't know you, right? You're applying for this loan, even if you're sitting across from a loan officer. They don't know you. They may see you, but they don't know you. But they're looking at this piece of paper. It's a track record, okay, of how you're repaying your debts. That's what it's about, okay? So the information appears on your credit report. It's generated by 3 credit bureaus, the 3 major credit bureaus: Experian, Equifax, and TransUnion. I know you guys probably heard of those credit reporting agencies. They do not have anything to do with the government. They're independent, okay? They're independent. So check it out. What happens is The credit reports are going to contain information about you and what you've done in your past, all right? It's going to talk about whether you paid your debt on time. It's going to talk about whether you were slow, whether you were late, how often you were late. It's going to talk about all that. Hey, what's going on, T? How you doing, man? Glad you jumped on, man. Thanks for sharing as well. So they're going to talk about that, all right? They're also going to talk about the collection accounts. They're going to talk about judgments, liens, bankruptcies. All that has to do with your character, all right? And most of the information on there is retained for 7 years, most of it, okay? Now, there's some things that can be held for up to 10 years, but most of that stuff is held for 7 years. The Fair Isaac Corporation. The Fair Isaac Corporation, otherwise known as the FICO score. The FICO score. That's going to be the information that creates your credit score. Now, I'm to tell you something, all right? The FICO score was brought about in about 1956, okay? So before 1956, people had no issue with credit. It was word of mouth. But since they put that out there, now they use the FICO score to kind of manage, help banks and other loan officers or whatever, lenders manage if your credit worthiness or how your level of credit worthiness is, okay? So that's why they use the FICO score. And it's just a quick snapshot of your credit report, okay? So that's character. The next one is capacity. Capacity, right? Capacity, it measures your ability to repay your loan, okay? Capacity measures your ability to repay your loan, comparing your income against your recurring debts. Also, your debt to income ratio. If you've ever been to a loan officer, you went to go, get a real serious loan, all right? Whether it be an auto loan or a mortgage, they looked at your debt to income ratio, meaning how much debt you have basis versus how much income you actually making. That's your debt to income ratio. And there's a calculator where you can actually you can figure that out before you even go in there, okay? Also, they look at the length of time that you've been at your job and also your stability. So if you're jumping from job to job to job, that's going to really lower your chances as far as getting the loan that you really want, okay? So that was capacity. The next one I want to talk to you about is capital, all right? Capital. Capital is something that a lender considers what you're willing to put toward the potential investment. Meaning, how much money are you gonna put up, okay? Let's look at it like this. If you're gonna go get a house, they're gonna ask for a certain amount of money down, a certain percentage. Whether it's a traditional loan, a traditional mortgage, or whether it's an FHA or whether it's a VA loan, it doesn't matter. Certain organizations are gonna ask for certain amounts, if any, okay? Now, the amount of money that you're willing to put up is gonna make it easier for the lender to say, hey, look, man, they're serious about it, we're gonna give them the loan, okay? I wish it was that easy, but it's other factors, but that's one of the factors. Capital, how much money are you willing to put up in order to get this loan that you want, okay? Now, here comes the big part, and you guys know about this one. This is collateral, okay? Collateral. This is what's gonna help you secure your loan. What do I mean by securing your loan? Well, imagine this. Imagine you go out to get an auto loan, okay? You want to get a loan for a vehicle. Well, in order to get a loan for a vehicle, they're going to look at the same things. They're going to look at the same information, okay? But that loan, that car is secured by that loan, meaning that they're going to give you the loan and they're going to let you drive the car as long as you pay the money back. As long as you continue to pay on time, as long as you're paying back, they're going to give you the loan, they're going to give you the car, all right? But as soon as you default on the loan, then they're going to take the car. So the car is really not yours, okay? It's not yours until you have a title. A lot of people don't really understand that, okay? A lot of people don't understand that it's not your car until you finish paying for it, okay? Same thing with a home. It's the same thing. That home is backed or secured by that mortgage. So that's something that's hanging over our heads. And until we pay that off, then we don't own that property or that vehicle, okay? And the last thing I want to talk to you about is conditions. Conditions of the loan, okay? This is the amount of interest the amount of principal. And let's talk about that real quick. The interest and the principal. See, when you have a loan, when you're going out and get a loan, there's two payments, okay? And a lot of people don't know this. You got your interest payment and you got your principal payment. Of course, your interest is going to be the amount of money that you are agreeing to pay back because you're getting this loan, okay? So you're agreeing to pay back X amount of interest in order to get this loan. You know, one of my mentors told me that interest is the penalty that we pay for something in advance that we can't afford right now. I'm gonna say that again. Interest is the penalty that we pay in advance for something that we can't afford right now. So anytime you're going to borrow money, anytime there's some type of borrowing transaction going on, there's interest being paid. Anytime interest being paid, there's borrowing going on. So imagine this. When you go to the bank and you deposit, and I don't want to get off track, but when you go to the bank and you deposit your money into a savings account or a checking account and they give you interest, they're giving you interest. That means that they're borrowing money. See, you're doing the bank a favor. You're doing the bank's favors because the banks don't own any money. But they make money off of the interest that they make off of your money. Hope that makes sense, okay? So, the conditions have things to do with the interest, the principal, and it makes a difference, and it influences the lender's decision on whether they're going to give the borrower the loan or not, whether they're going to finance you or not. Okay, this is just basic reasons why people get denied. Okay, let's see. For example, if somebody applies for a car loan or a home improvement loan, they may be more likely to say, "Hey, look, if you tell me that you're going to apply for a finance for a vehicle or you want to do a home improvement loan," they may be more likely to give you that loan versus if you say, "Hey, look, I just want to walk in, I want to get a signature loan." Okay, them saying you getting a signature loan, you just signing it, okay, and they don't know if you're going to use the money to go gamble, if you're going to use the money to do some illegal activity. They don't know, so they're taking a chance. But see, the bad part about one of the worst parts about all this is still not the bank's money, man. See, if you go to the bank, to get a loan, and somebody like me, for instance, paying my mortgage, and I'm paying interest on my mortgage, you're basically borrowing the money from me, but I'm paying the interest back to the bank, and the bank is making the money off the interest. So if I bought my house outright flat cash, then the bank wouldn't have any money from me. And then I would invest my money into the bank like I'm doing right now, invest my money in the bank, and I'll be getting paid through my investments, and you're actually still borrowing from me. So bottom line is this: banks don't have money, okay? And they make money off of the interest that they make off of the loans that they give off of other people's money, okay? Too easy. But the 5 C's of credit, you got character, capacity, capital, collateral, and conditions, okay? So that's why people get denied for loans, man. People get denied for loans, and they don't even know what they're up against when they go into a bank, or they go to a car dealer, or they go to one of these check cashing places, these signature loan places. You know, holidays are coming up right now, right? The holidays are coming up right now. People are being pressured to go out and get gifts. And I'm not saying everybody, okay? But they're being pressured to go out there and get gifts, and they're not going to have the money. So what they're going to do is, what's going on right now is they're getting letters in the mail right now. They're getting letters in the mail, and the letters are being sent to them with checks in them, saying, "Hey, look, if you sign this check, we're gonna let you get this money, but it's gonna be at a certain interest rate, okay? At this interest rate, we're gonna let you borrow this money, and you can pay it back, and so on and so forth." Well, it's conditions. It's conditions with that money, not just give you that money, okay? So be mindful of that as the holiday season comes up. Don't fall for the okie doke, man. Don't do it. Do not do it. It's not that serious, man. If your spouse or significant other, your kids don't love you because you don't buy them Christmas presents, because you don't have the money, don't go into debt doing that stuff, man. We're out here trying to show people how to minimize their taxes, eliminate their debt, you know, put themselves in a better financial situation. But credit is one of the most important factors, if not in your life, as far as financial education. Now, check this out. I talk to several people on a regular basis, all the time, and I teach money, all right? That's what I do. I teach financial education. I teach people how to legally keep more of their money. I teach people how to do something that's called income shifting, okay? So here's the deal. I run into people all the time. They say, well, all I want to do is just fix my credit. It hurts me so much to hear someone say that, because it's a lack of understanding and a lack of education, because all you want to do should not be just to want to fix your credit. Because first of all, your credit is something that should be sacred to you. I didn't learn that till later on in life. Credit should be something sacred to you. But at the same time, if your finances are jacked up, just fixing your credit is not going to fix your finances. You got to fix your mindset. And with that being said, people who fix their credit and all they want to do is fix their credit, they end up fixing their credit again. Okay? They end up fixing their credit again and again. And that's why a lot of the third-party credit repair agencies are actually making a lot of money off of people because of their ignorance. It's as simple as that. Hey guys, thanks for jumping on. I appreciate it. Please like the video, share the video, and if you find something interesting, feel free to drop a question, and I'll be happy to answer the question after the broadcast. The last thing I want to go over with you is a product that I actually provide, right? That I actually provide. And I want to show you how simple it is, or share with you how simple it is to repair your own credit. But you first have to have the mindset to want to do it. See, there's lots of people who want 750 plus credit scores. I'm gonna ask you right now, if you currently sitting on a 3, 4, 5, or even 6 something, you need to come see me. Okay? Credit is one of the things that's gonna help you to make all these major purchases. But understand this: having good credit shouldn't be abused. Don't just use your credit to go buy things. We teach people how to use the credit to leverage to invest in things, okay? Invest in things like properties, okay? Invest in things that's going to bring value to you, okay? So we have what's called a credit repair system, okay? And what happens is, these are some secrets that a lot of credit repair agencies are not going to share with you, because if they share these secrets with you, then you no longer need them. I'm not that guy. I want you to have the information, but I want you to have everything, guys. I want you to be on the up and up with yourself, and I want you to understand the importance of good credit and how to maintain it and how to repair it, okay? So check it out. Whether bad credit is something new to you, or you've been struggling with bad credit for years, right now you can turn this thing around. Now, it's October 16th, 2018. You got about little less than 2.5 months to the end of the year. I guarantee you guys, if you start repairing your credit today, if you're serious about your credit today, within the next 70 days or so, you can see a huge improvement. We've had people to improve their credit, to turn it around within 45 days, okay? Within 45 days. See, a lot of people are making the money, they have the income, but they got bad credit because they made bad choices, okay? Some of them have bad habits. Whatever the case may be, we know it's a mindset change, okay? So, right now, we got what's called a do-it-yourself credit repair system, okay? Now, I hear people all the time, look, I just rather pay somebody for it. Check it out, man. You can't afford it. You can't afford to pay somebody to repair your credit. Listen to what I'm saying. Stop throwing money away. Now, this may sound like I'm hating, but I'm not a hater. You know what I'm saying? I'm a congratulator. I'm a motivator, and I'm an educator. Stop throwing thousands of dollars away to a third-party credit repair agency who's only going to minimally repair your credit for you. That's not going to educate you on how to maintain your credit, okay? Stop doing it, right? It makes no sense. Let's put that money back in our pocket to good use. Let's use that money to pay off debt, okay? Use that money to invest. Now, here you go. This is how long the information stays on your report. Accounts agreed as paid in bankruptcies, up to 10 years. Collections, judgments, late pays, and paid tax liens up to 7 years. And then unpaid tax liens indefinitely, right? So, I want you guys to understand that strategy is better than brute force. What do I mean by that? Well, third-party credit repair agency, they're gonna go ahead and they're gonna attack some of your payment history, okay? Your payment history counts towards the most percentage of your credit repair, and that's 35%. So let's look at it. Payment history is 35%. Your amounts owed is 30%. New credit is 10%, along with your credit mixture is 10%. And then you got The length of credit is 15%. So most of the third-party credit repair agencies, if not all of them, they only focus on the payment history, okay? So they're gonna go ahead and attack those derogatory items. And they leave out the 65%, man. So what I'm trying to show you is this. Smart strategies are gonna pick up the other 65%. So let's talk about that. See, knowing your credit and knowing your credit score and how good your credit score is only gonna do you so much. It's only gonna take you so far. You gotta pull your credit report, okay? You got to. You cannot be afraid if you're seriously trying to make that major purchase. If you want to make that major purchase, you got to pull your credit report. And don't just pull one, okay? There's 3 major credit bureaus. You want to pull your Experian, you want to pull your Equifax, and you want to pull your TransUnion. Now you can use annualcreditreport.com. They'll give you a free credit report once a year. Okay, now if you've done it and you've done it at the beginning of the year, you can't do it until the next year. Now, I have a system also that if you've done it already, then you can actually, you can get on the system and you can pay for your credit reports. You can pay $8 for your credit reports, okay? That's nothing. That's a drop in the bucket. It's an investment in yourself to fix your own credit, okay? So, now, if you're going to be actively involved in repairing your credit, there's some things that you're going to need to do, okay? And one of them is you're going to have to track your results. So the question is, do you need credit monitoring? Yes. You do need to monitor your credit. Why, Eric? Well, I'm glad you asked me, guys. The reason why a lot of people have things on their credit, bad things or derogatory things on their credit, is because they don't have any monitoring. They don't have identity theft protection. They don't have the things that they need to protect themselves. So yes, you need to monitor your credit, okay? And I'm not talking about Credit Karma. I'm not knocking them. Everybody likes free. See, free is gonna be the end of all of us, okay? Everything that's free is not great. You get what you pay for, and sometimes you get what you don't pay for, okay? So just understand that you want to have a great snapshot of what's going on, okay? There are some alerts that's gonna happen. So some people have credit cards. I know some people have credit card accounts through Capital One, and they have great credit monitoring tools. I'm not saying to deal directly with me. What I'm saying is you need to have something a little bit better than something that's free, okay? So it's gonna also alert you to problems that you can actually catch quickly, because remember, you're trying to repair your credit, okay? That's your footprint in this world. I don't care what you look like. I don't care who you are. I don't care what your gender is. I don't care what, okay? Bad credit don't care. Bad credit don't care what your race is. It don't care what your religion is. It don't care what your gender is. I'm telling you, man, bad credit do not care, right? So you can go through us and you can actually order your credit monitoring scores, okay? And we'll go through that at the end, but you can get all 3 of your credit reports from all 3 bureaus for just $8, man. I got a system that can help you out just for $8, all right? So I hear people saying it already, man. Well, you know, Eric, I know you, and I don't want you to make any money off of me. And you know what? I don't want to make any money off of you either. I'd rather make money together. But I'm going to tell you, the way this world is set up, somebody's going to make money off of somebody. So don't look at it like that, okay? Let's just share this information, and let's be great, right? So next thing you want to do is you want to make sure you identify the errors on your credit reports. And I have it ranked right here, okay? So you want to identify the derogatory items. Bankruptcies, foreclosures, repossessions, loan defaults, court judgments, collections. You want to go ahead and hit the past due payments, the late payments, the credit inquiries, and then anything less than 2 years old. That is how you're going to rank it, okay? And I know I'm saying this stuff, but I promise you guys, if you're interested, you want to know, I actually did a video. I'll share it with you after this so you can actually go back and look at it, okay? And actually be able to write it down, okay? So here you are. The next thing, right, after you rank this thing, after you ranked everything, now you're ready to actually write your letters. But see, here's the problem with a lot of people, and this is what's been messing a lot of people up, right? They don't know what to write. So that's what they're basically paying for. They're paying Lexington Law $100 per letter. Yeah. Why did I say that? Well, because they're only basically sending off one letter a month, and you're paying about $100 a month. Okay, so you might pay $70 a month or $50 a month. Yeah, but you don't want me to make money off of you. Yeah, you didn't have a problem with Lexington Law, right? See, there's other options, guys, and I know this ain't funny. This is actually sad that we as people, we know each other, and because we're familiar with each other, we don't want to deal with each other. I want to share this information with you that's going to make you more successful, okay? We have the letters already written. We have the templates already written. So all you got to do is fill in your information, okay? That's all you got to do. Fill in your address, fill in whatever item that you're disputing, and if it's something, after you pull your 3 credit reports, you want to make sure you find that item on each credit report. You want to send that letter off for each credit report. Too easy, right? So all you're doing is filling in a blank. That's it. So the letters have been written, and they tell you which letter to do in order. Guess what the order is? 1, 2, 3, and 4, right? So you got the verification, method of verification, the violation of the FCRA rights, the intent to litigate, goodwill, and we got pay to lead letters, okay? All that on deck, just for you, right? So the next thing, after you write your letters, you want to make sure you address the issue by mailing the letters off. See, a lot of people want to do something like, I'm getting my credit repaired through Credit Karma. I don't know how many times I heard somebody say that. I'm getting my credit repaired through Credit Karma for free. Well, good for you, right? But I'm going to tell you, hey, Miss Phyllis, how you doing? Thanks for jumping on. What I'm going to tell you is this. Getting your credit repaired through Credit Karma, which it means that you're going to be disputing derogatory items through Credit Karma. And the first thing we tell you is to avoid online disputes. Why, Eric? Well, I'm glad you asked. Because if you dispute something online, then it's your word against theirs. When we were little, we called it he said, she said, right? He said this, she said that, and nobody can prove it. See, it's up to you. It's up to you to make sure you're doing it correctly, but it's up to them to show the burden of proof. A lot of times we end up giving too much information, man. I know there's a lot of people out there that say, I just don't want to lie. Well, pay the debt. Pay the debt. But that's why they have the FCRA, right? Because what happens is there are limits. There are limits to this thing. There's time constraints to this thing. So a lot of people don't owe. A lot of people don't owe because of the law. The same law that allows you to get this debt is the same law that can get you out of debt. So you want to make sure you avoid disputing it online. You want to make sure you send it certified mail. Well, Eric, isn't that gonna cost me money? Yeah, it's gonna cost you a couple of dollars to send it certified mail, but at least you know that they're gonna get it. Check it out. When you send it certified mail, first of all, once they receive it, they have 30 days to review it. But they're not reviewing it. First off, you gotta understand something, guys. It's 68 million people out here with bad credit, right? They don't have enough people at these credit bureaus to say you owe or you don't owe. It's going in the computer. The letter is being read by a computer, okay? And the computer is picking up on keywords. Whereas if somebody was reading it, it would never get done in 30 days. So now, I hope we got to understand it right there. So you want to go ahead and send a certified mail so yours don't get put on the bottom of the pile. Now they have to sign for it. Then you're going to get a receipt. And once you get the receipt, you know that they're working on your credit, okay? So you want to make sure you got some good records and keep records of that because anything can happen to the mail, okay? So now, while you're repairing your credit, you want to make sure you reduce your credit card utilization. Don't use that credit, use it as little as possible, okay? As less as possible while you're repairing your credit because what's going to happen is you're going to go up, go down, go up, go down. You don't want to do that, okay? Here's a strategy that we have. It's called, I want you to write this down, income shifting. That's INCOME, shifting. Well, we're going to show you how to legally lower your taxable income on your job. If you got a job, most people are overpaying taxes, okay? Why is that important, Eric, to shift my income? Well, you don't want to just, first of all, dispute the derogatory items, because some of the stuff you owe. If you got a $3,000 balance on a credit card, and you're disputing one that is in default, you still want to pay the $3,000 credit card balance down. So if you can shift your income, meaning if you could correct the errors on your W-4, bring back more money into your household throughout the year, pay the balance down, it's going to help your credit score go up as well. You get it? See, everybody don't have the money to pay it off right off bat. Everybody don't have the available cash to pay it off. But you have money in your possession through what's called your job that you're overpaying in taxes anyway. What about the IRS? What about, I don't want to get in trouble with that. Well, listen, if you know the rules of the game, then you're not going to get in trouble. Number one. Number two, if you're waiting on a tax refund, that means this October and you're struggling. That means that you're going to get a loan to pay for Christmas anyway. So why not adjust or correctly fill out your W-4, right? Correctly fill out your W-4. Get the maximum amount legally back throughout the year, and then get out of debt. Once you lower your debt, your cash flow is going to increase. If you have a $200 a month payment going out, and you pay that payment out, pay that debt off, now you're $200 to the good. See how that works? So imagine using a strategy to shift your income and minimize your expenses. Get rid of some things that you really ain't using. Get rid of some things that you really don't need. Okay? This is not about luxury. I don't want to speak living meager. But what I'm saying is, if you're serious about buying that new home or buying that new car, then you're gonna have to go without some things. That's how it is, okay? I'm not saying not to eat. I'm not saying not to go eat out, not to take your kids to the movies. I'm not saying that. But if you can shift your income back into your house, so it's gonna give you some slack, okay? So, also we got some debt elimination software that you can track it, okay? Gives you a great snapshot. Now I want you to understand, and I'm just about done, guys. Taking care of the negatives on your credit report is only going to do you so much, okay? It's only going to do you so much good. You're going to have to start learning how to rebuild your credit. Now, how many people out there have heard that, I'm trying to fix my credit. I don't need another credit card. That's just going to make my credit score go down. That's somebody who don't understand how credit works, man. I just talked to you earlier about debt to income ratio. Debt to income ratio. If I have $5,000, let's say if I got $10,000, a credit line of $10,000, right? I have a credit line of $10,000, and I have 5,000 of that maxed out. Then I go back and I get another $5,000 of credit, open line of credit. Now I have $15,000 of available credit, and I'm only now using 5 of 15,000 instead of using 5 of 10,000. I just went from 50% of usage to 30% of usage. Wow, isn't that something, okay? I just went from 50% of usage to 30% of usage. Now, so you want to get some new credit history, okay? You got to do that. How can you do that? You want to rebuild your credit. Add new credit history by getting a department store card, okay? Add new credit history by getting a secure credit card, right? What about a secure installment loan? A credit builder loan? I know you guys have heard of some of these things. Authorized user. All those things can help you to rebuild your credit, okay? We have a system. In our system, we have something that shows you how to do that and explains it step by step. Now, let's talk about the authorized user real quick. There's people out here that's selling their credit worthiness, selling their credit report to other people as authorized users. Go to your parents, go to your grandmother, go to an uncle or aunt, somebody who you trust who has a credit card that's in good standing and that has been in good standing for several years, right? And ask them to add you as an authorized user. Once they add you as an authorized user, right, Now what happens is the credit card agency or company is going to send a credit card in your name. Do not accept it. Have them send that card in the person's name who the account's for, because you don't need the credit card. All you need is the history. Okay, you're not there to ruin their credit. You're there to allow them to help you to build yours until you alleviate some of those things. Okay, and you want to make sure you check your credit mixture, and then you want to challenge all the hard inquiries. Okay, now understand this: you got to be patient with the process and do not give up. Remember, guys. You got like the consumer, I think it's the Consumer Financial Protection Bureau, and then there's credit attorneys that's out there. Some agencies out there that will answer questions for free. But you want to understand that the process, it takes some time, okay? You're not going to repair your credit overnight. It's a process. You didn't get bad credit overnight, and you're not going to get good credit overnight. It's a process, okay? So what we have, my system provides you with 26 videos, okay? 26 videos, step by step on how to repair your own credit. 4 rounds of dispute letters, all right? 26 videos, 4 rounds of dispute letters. You can do this yourself. If you went to high school, even if you didn't, you can read. You got an 8th grade education. You can watch a video. You can do this yourself, okay? 26 videos, 4 rounds of dispute letters, and it's going to tell you step by step how to do it yourself, okay? If you want to get involved with this, all you got to do is drop your email into the comments, okay? Drop your email in the comments, and I can help you get started today. What I also offer is our financial education piece, where we show you not just how to fix your credit, but how to fix your finances, fix your life. Now you can get this credit repair system for $99.95 one time. Okay, it's yours. It's yours. But understand this: fixing your credit is not your problem. Fixing your finances is. So imagine partnering with me, all right, and buying a membership from me that's going to help you to fix your finances. Just credit is just one part of what we do. We're going to show you how to eliminate your debt. We're going to show you how to increase your pay. We're going to show you how to build a business. We're going to show you how to increase your credit score. We're going to show you how to invest. That's what you need to do, okay? You need to get all of that. And you can join and partner with me today for one time for $47.90, right? $35 a month. You're going to get a website, and you'll be able to share this information with people. Imagine being able to repair your credit for $35 a month and to repair your finances. Plant financial seeds, not just for yourself, but for your generations to come. Hey guys, look, we don't all know what we don't know. We got people who are on this call that's going to see this video that's in their 40s, in their 50s, and they got bad credit. They're renting right now. They're driving a hoopty. They're working a great job, and they deserve more. But their pride won't let them do it. They don't feel like it's important enough for them to invest a small amount to get themselves together and to get their kids together and to get their children's children together. This information that I'm sharing, it don't just turn into you getting your credit repaired. It turns into a business opportunity. It turns into tax deductions. It turns into a write-off. It turns into everything you need to be financially successful. All right? If that's something that you want to do, hit me up. If you want to see the YouTube recording, you can hit me up. Look me up on YouTube, Eric space McKinley. That's ERIC space MCKINLEY 72. Okay, that's my YouTube, and you can actually subscribe to my YouTube. I got a couple of videos on there. I'm actually building my followers right now, but I can actually share this presentation that I did with you, and you can actually see it. Okay, the information that I'm sharing right now is free, but you're gonna pay dearly for what you don't know. Hey guys, my name is Eric McKinley. Like I always say, guys, when you know better, you do better. For those of you who have stayed to the end, I appreciate it. For those of you who have jumped on and shared my videos and liked it, I appreciate it. For those of you who just jumped on just because you was nosy, hey, I still appreciate it. Thanks, guys. If somebody shares this information with you, get with them so they can help you get either get your credit repaired if that's all you want to do, or get with somebody so they can help you get your finances together and get your life together. Because we're talking about financial freedom, time freedom, and location freedom. Like I always say, guys, when you know better, that's when you can do better. And the only knowledge that's powerful is applied knowledge. Thanks again. Y'all have a great day.